Hi friends, in the previous parts we have discussed different aspects of the Indian economy and the response from the government of India on various items. Now in today's class we will discuss opposite monetary management and financial intermediation. We have discussed about the state of economy, we have discussed about the fiscal development and the fiscal management of the economy. We have also discussed on the external front. Now today we will discuss the monetary management and financial intermediation. This monetary and financial sectors of the economy are again very important aspects. Normally in an economy there are two policies, one is fiscal and second one is monetary. Fiscal is very important, more significant one, but at the same time monetary aspect is also very important. And if you don't balance this fiscal and monetary aspects, then your economy is not said to be unstable. And apart from this monetary aspect, this financial intermediation is also important. There are lot of financial institutes are there in our country, and these financial institutes are the institute related to the finance of the economy are again very important. During this pandemic time, what happened to these things and how our governments have or how our regulating agencies have made some important policies that are more suitable to manage this monetary and as well as the financial aspects of the economy. So that we are going to study. So that is why the theme name is the opposite monetary management and financial intermediation. That means a more suitable or a more appropriate monetary management and financial intermediation. See, during the COVID-19, entire economy has stand still. There is no kickstart in the economy. That means the production and consumption has come to a lower level. Apart from very essential things, people are not interested in producing and as well as the consuming the things because of uncertainty of the future. Now every economist has suggested that this is a time where you need to have a loose monetary policy. That means when the entire economy is standstill, you cannot control or you cannot tighten the supply of money. You cannot tighten the supply of money. If you tighten the supply of money, then it is very difficult for both the consumers and as well as the producers to consume and as well as produce. So that is the reason why during the crisis time there must be a loose monetary policy, and apart from loose monetary policy there must be a more fiscal spending. So that we have already discussed how the governments have spent over a period of time, initially on this creation of safety nets and later how they have transformed into the capex expenditure and as well as the credit linked subsidy and other things. Now on the monetary front also there must be a loose monetary policy. But the point is, whatever the loose monetary policy or accommodative monetary policy will have its own consequences again. But in spite of that, how we are able to manage our monetary policy and what was the policy stance, and apart from simply adjusting the monetary policy, what are the other things that the country has taken, and also with respect to the financial institutes that we will study. Now, see, the monetary management or the monetary means the supply of money in the economy, and the supply of money in the economy will be done by the Reserve Bank of India through its different policy rates, and we are all aware. And the key policy rates are repo and reverse repo. The key policy rates are repo and reverse repo. Repo and reverse repo. There are other things like CRR, SLR, marginal standing facility and other things, but repo and reverse repo is very important aspect. Now in this repo and reverse repo, repurchasing rate and reverse repurchasing rate, and you are all aware, if repo increases what happened, if reverse repo increases what happened. But if you observe, just I am drawing a line here, August 2018. From August 2018 onwards, it has continuously declined. It has continuously declined. And this policy repo, this indicates, and reverse repo is always 1% lesser than repo. It's normal, 1% is a convention, but sometimes it may not be 1%, but it is less than 1%. But anyhow, a repo is always greater than a reverse repo. Now, if you looking into this response from August 2018, the Reserve Bank of India continuously following an accommodative stance. So accommodative means, so they are interested in this loose monetary policy, or they wanted to pump more amount of money into the economy in a way of reducing interest rates in the economy. So why Reserve Bank of India has taken that step prior to this? Because growth is one of the important aspect in the economy, and as this government is strictly regulating the inflation, because we are now strictly regulating the inflation within a range of 4 plus or minus 2%. 4 plus or minus 2%. This was a mandate given to the Reserve Bank of India by the Parliament of India, and Reserve Bank of India is able to maintain inflation in a comfortable zone. And when we are maintaining inflation in a comfortable zone, then we have to aspire it for the growth, and growth will be possible with this accommodative stance of monetary policy. And in order to provide, or in order to encourage the growth in the economy, Reserve Bank of India has started its policy of reducing interest rates over a period of time. And if you looking into this, somewhere here, okay, anyway, April, so that means somewhere here we got COVID. That means the COVID-19 pandemic has started. Though we already reduced the interest rates, again we have reduced the interest rates after COVID-19. That means gradually we have started increasing the interest rates. So we are increasing the interest rate initially to provide a momentum to the growth, and after this, once we got this COVID-19 pandemic, then we have started providing more impetus to the economy, both in terms of consumption and as well as the demand. Reserve Bank of India has taken this stand, and now we are somewhere at 4%, we are maintaining at that level. Because again, if you start reducing more amount than 4, then it will be very difficult for the depositor to deposit, then you will get some sort of liquidity crunch. So there is a problem. That is why we have stopped at 4%. Now once you observe this repo and reverse repo, it is an accommodative stance, not even from the COVID-19, but even prior to the COVID-19. But here it is, the purpose here it is different, and here it is different. Okay, this is repo and reverse repo. This is how we are able to pump some extra amount of money into the economy, either in terms of loans by both retailers and as well as the industrialists or the business people. Next, now just I want to give some important information with respect to the different policy rates, so that you can understand repo rate, reverse repo rate, cash reserve ratio, statutory liquidity ratio, and marginal standing facility or bank rate. So from 2020 onwards, and when I am saying 2020 means, you must understand, by this time already a huge around 135 basis points, that means 1.35% of the interest rates was already cut by that point of time in order to provide the momentum to the growth. Now if you looking into from 2020, so from the February, March, April, May, again 2021 we have seen, see repo rate 5.15, If you observe it clearly, again we have reduced this to 4.40, 4.40, 4.40, 4. Now we are at 4. That means again on the above of 135 basis points earlier, we have again reduced another 115 basis points, and we are maintaining at constant level since then. And we are not ready to increase, the interest rate because we are maintaining a comfortable level of inflation. That is the reason why it's not necessary to go for the increase of interest rates we are following. And these are the, and okay, now repo rate. So this is reverse repo, again the same path you can see. Cash reserve ratio, and cash reserve ratio you see 4%, and it has come down to 3 to 3.5. That means up to 21 March we have reduced it, but again after that we have moved out of this COVID-19 effect to some extent. That is the reason why again we have increased back. That means during this period the bank no need to kept more amount of money with it, and it can disburse that money. But later again, because this is a critical condition, and if the banking system, if something goes wrong, then it will become a problem. That is the reason why again we have brought it to normal level. But whereas when it comes to the statutory liquidity ratio, again we have reduced by 25 basis points. Anyhow, the statutory liquidity ratio, little amount of reduction will also certainly helps the banking system. And even if you are looking into this marginal standing rate also, it has reduced. That means the policy rates has reduced completely. So this reduction in policy rates, is certainly helped the economy, and it has certainly helped in reviving the economy. It has certainly helped in starting the business activity in the economy, and it has certainly helped in reviving the demand in the economy. That is how Reserve Bank of India has made his policy to suit the current needs. It's not the government alone, but it is also the regulatory agencies that have performed well. Next, broad money growth, aggregate deposit growth. And if you are looking into this broad money growth up to February 21, this broad money has increased, but after that it is started reducing in percentage wise. After that they started increasing, but again sometimes it is increasing. That means why this is happening? What is the meaning of broad money? Broad money is something about the more dispersal of the amount by the banking system. But what happened is, when it comes to these months, a lot of banks have started depositing their amount of money with the Reserve Bank of India. Because of that reason, this broad money has come down. And aggregate deposits growth, and if you see the deposits growth rate, almost on average they are maintaining same level, maybe some little fluctuations, but deposit growth rate is on average it's same. Next, money multiplier and money multiplier, you are all aware, it is the broader money by reserve money, Yes, the money multiplier, if you see it from 1951 to 52, it gradually increased, and if you see in the 2016-17, it's an overall jump, but after that it started reducing. Okay. Now again money multiplier adjusted for the reverse repo. That means if you adjust it to the reverse repo means what? Under the reverse repo, what will happen? The banking system has to keep some amount of money with the Reserve Bank of India. So then automatically it comes down, and that has shown here. Okay. So it's normal money multiplier, and it is adjusted to repo. Next, liquidity condition. Okay, it was very good in January, March, May, but after that it has entered into a negative. So a negative sign indicates that surplus liquidity in the sense there is more amount of liquidity, no one want to take it as a loan, that is the condition. Next, so once you understand this regulatory policy of Reserve Bank of India, it has completely followed a more suitable lower policy rate policy, and even today Reserve Bank of India is saying like still I am sticking into this accommodative policy. That means if at all required, I I am ready to reduce the interest rate. But the only point is you cannot reduce beyond such a particular point, because it will hurt the depositors, and at the same time if suddenly inflation starts increasing, then it is very difficult. So that is why they are going for wait and watch policy. But if really inflation is beyond the level of control, then certainly they have to reduce it, but we are not facing such a condition now. Now, apart from the just policy adjustments, the RBI has taken various measures. That measures I will take as a part of policy response, but now we will just looking into the various parameters, that is how they are changing in the economy. Now I will come to this financial intermediation or the financial institutes. So when I say financial institutes, the banks are the most important financial institutes. Now in these banks, the moment when I say bank, immediately you will understand. So what is the deposit ratio, what is the loan ratio, what is the non-performing assets ratio, what is the provisioning ratio. So these are all normally the figures which will indicate the health of a banking system. Now if I take the gross non-performing assets and net non-performing assets, and you are all aware what is gross non-performing asset means, non-performing assets plus structured assets. When I say net non-performing assets means, the gross non-performing assets minus the provisioning that we have already made. So now if you looking into this, the gross non-performing asset from 2008, if you see the gross non-performing asset ratio, it is 11.2 when in between 2016-17 and 17. And you know the reason for this. Last year economic survey has clearly explained the reasons for this gross non-performing assets. The reason for gross non-performing assets, and how we have managed our policy, and how our banking system has actually relaxed itself, and how it has disbursed the loan without looking into whether the loan become non-performing or performing. And similarly net non-performing also increased, but thereafter it has started coming down. Now we are ended with 6.9 in September 21, 2.2 in September 21. It is a very good move. But one important aspect that I have already mentioned in the financial position of the country's chapter, under that theme I have mentioned, like last year there was some sort of relaxation given by the RBI as far as the asset classification is concerned, and it has not included in this. But probably if that relaxations whatever we have given, if we start removing, then we don't know what will happen to this amount. This may increase, but anyhow as on today it is in the path of reduction. That is a very good move, both gross non-performing assets and net non-performing assets. Yeah. Now non-performing assets, capital to risk weight adequate ratio, return of investments and return on assets, that you can see in this. So this capital to risk weighted asset ratio is again very important. How much amount of capital that you have in order to maintain the risk is a very good indicator. And gross non-performing, if you see, it is coming down completely, a very good move from March 19 to September 21, that means pre-pandemic to pandemic. And this capital to risk weighted ratio, just see, risk weighted assets ratio 14 to 16, an improvement, very good, an improvement. And again a return on investments and return on assets, they are increasing. Here also it is increasing. Gross non-performing assets ratio, it has come down. Now I will show you, this is overall, this one is overall scheduled commercial banks, but now we will start looking into public sector and private sector. Government always shows that these public sector banks are not performing well because of these reasons. Definitely the banking culture or the banking culture, especially in public sector banks, must be improved, but we need to understand one more thing, like the public sector banks have an extra responsibility to perform. Normally private sector don't takes it up. That is also a reason, but one must thing we need to understand, okay, the government has to respond it properly. At the same time the management level at the banking system should also take care about it properly. One thing, the extra responsibilities must be curtailed and there must be a specific banking system to that, or otherwise we need to digitize this. That is the first point. Second one is, when it comes to the banking system, definitely they have to improve something on different aspects. Simply we cannot put simply we cannot put blame completely on bank, and neither we can put it on bank nor it on only the management of the bank nor the government. But if you see the gross non-performing assets of the, just see the public sector banks and as well as the private sector banks, it is 8.57, it is 4.73. It is 8.57 and it was 4.73. Okay, just observe. So here it is less, and again capital to risk weighted assets, it is 14%, here it is 18%. That means they are performing well. Again on return on assets and return on investment, you can see both the things private sector is doing well. So private sector is doing well on both the fronts. This is a comparison normally the government brings whenever they are bringing the philosophy of privatization of the banking system. Banking system must be run effectively, banking system must be capable of earning the profits and again giving more amount of loans so that the money multiplier in the economy increases. But because of these extra activities and the inadequacy in their functioning, unfortunately nowadays they are improving to some extent, but the thing is, even still they are maintaining at a lower level compared to that of private banks. So just try to have an idea on these figures. Okay. Next, weighted average lending rates of scheduled commercial banks. Fresh loans and outstanding, the average lending rate is coming down. Okay, the average lending rate is coming down because the interest rates in the economy has come down. Now, there is a one important thing with respect to the digitization, and economic survey has clearly mentioned some important aspects with respect to this digitization. So under this digitization, Unified Payment Interface UPI is currently the single largest retail payment system in the country in terms of volume of transactions, including its wide acceptance. So the wide acceptance has increased. Now you see they have given some information. In December 2021, 4.6 billion transaction worth of 8.26 lakh crore were carried out by UPI. So whenever you are writing any digital transaction related information, you can use it. Okay. And one of the initial objectives of the UPI was to replace the cash for low value transaction. See, the thing is, okay, these digital transactions we are bringing for making cashless society. Cashless society was something, an ideal condition. Perhaps it's not possible in this country, like a country like India. And but what we can do is, at least lot of small transactions we can make it cashless, then it is very useful, because you can't okay, as per the detailed transaction data of NPCA, 50% of the transaction through UPI were below 200. That means the 50% of the overall transaction what we are making are below 200 rupees, below 200 rupees. Now this is one more important thing, the third point, very important. On 1st November 2018, UPI as a payment option in IPO. That means if someone is subscribing to the IPO, they can pay that money through this digital transaction or UPI was introduced as a new payment channel to the retail investors by SEBI, because IPOs are something dealt by SEBI. So that is why now the UPI can be used in IPOs also. If you want to subscribe anything, you can pay it from directly UPI. In April-November 2021, the UPI processed more than 24.26 million one-time mandate create transaction value of 44,381 crore. So 44,381 worth crores of IPO transactions are made through this UPI. Okay, so that is one thing you need to understand. And another important aspect what we have made is the transaction limit for such transactions, which was increased by RBI from 1 lakh to 2 lakh, 2 lakh to 5 lakh. Now up to 5 lakh you can do the transaction through UPI. Up to 5 lakh you can do the transaction through UPI. Okay, this is one more important aspect. Next, Again this is very important, you may get a prelims questions, 5th and 6th point. RBI and the Monetary Authority of Singapore announced a project to link UPI and PayNow. PayNow is their one, UPI is India's one, and this UPI and PayNow, they are going to have some joint venture, so that they are going to perform. Okay. Next one, Bhutan recently became the first country to adopt UPI standard for its QR code. It is also the second country after Singapore to have Bhim UPI acceptance at the merchant locations. Okay. So the Singapore and as well as the Bhutan are interested in using the services of UPI. They are going to make a joint venture with the Singapore PayNow. Okay. Yeah. Now once you see the UPI payment, just I have shown you that the level of increased transactions. Now you can look at from 2016-17, because when we have demonetized in the economy, then we have started this process, and from then onwards you can see a quantum jump in the UPI payments. Okay, it is a value in terms of billions, this is volume in terms of transactions, you can see. Okay, this volume, this shows that. Okay, this is volume around in between 30,000 to 35,000, it is in million. Okay, and value you can see, and number of banks in UPI, they have increased from 44 to 274. Okay, so now they are moved to the UPI. Now these banks are linked to the UPI themselves. Now one more important aspect that I have mentioned in the survey is this e-rupee voucher. E-rupee voucher is again important aspect. It is not to replace the digital transaction and all, it's another form of a digital transaction. It's another form of digital transaction, and I have already made a clear video on this e-rupee. It was there in our Amrita channel. Just go and watch this. Okay, but you know, e-rupee is a person specific and purpose specific digital voucher, and it does not require any internet connection, it does not require any smartphone. Simply with a string of message that you will get to your mobile as an SMS, with that you can do the transaction, but these transactions are purpose specific and person specific. You have to be very clear with the difference with respect to the UPI. See, these are all very important, the difference between UPI and e-rupee, and now the central bank digital currency and this virtual digital currency or the virtual digital asset, and the normal currency, and also your the online transactions through your online banking, whatever the online banking transactions. So you have to be very clear about the difference between all these three things. Okay, what is a normal currency transaction, what is the meaning of online banking transaction, what is the UPI transaction, what is e-rupee voucher, what is the central bank digital currency, what is this virtual digital currencies. You have to make a difference of all these things, because you may get a question anything on this. Okay, now see again. So it was used for the COVID-19 vaccination. With the support of Ministry of Health and Family Welfare, we have started, and which saw more than 2.2 lakh beneficiaries being issued the voucher. Just go and watch that e-rupee, and later you can understand the meaning of this 2.2 lakh beneficiaries. Now again there is another important index, digital payment index, very important. You may get a question in the prelims by the RBI. It captures the extent of digitization that happened in the economy, and the index captures 5 different parameters, and you can see payment enablers, payment infrastructure both supply side and as well as the demand side, payment performance and consumer centricity. The highest weightage is given to payment performance, the lowest weightage is given to consumer centricity. Okay. So this is just have an idea on this digital payment index of Reserve Bank of India, because normally in the exam you are getting a questions with respect to the indexes published by whom, which of the following is the one of the parameter, or which of the following parameter is having a highest amount of weightage. So these are the things you may get. So anyway it has mentioned it in the survey, so you may get a chance to get a question. Okay. So payment enablers, payment infrastructure, both demand and supply side, payment performance and consumer centricity. So, digital payment index increased from 100 in March 2018 to the 304 in September 2021. That means the digital transaction infrastructure and digital transaction value, everything is increasing over a period of time. That is what the conclusion that we can draw. That is what the conclusion that we can draw. Next, yeah. Apart from the banking system, the non-banking financial companies are also important. Apart from the banking system, the non-banking financial companies are also important, because banking system catering to the some sections of the society, and non-banking financial companies are also catering the needs of the society. And if you looking into their credit growth year on year, and see, during 2018, 19, 19, 20, it was come down, because at that point of time there was some NBFC crisis was there, because some NBFCs were collapsed. That is the reason why. But after, with a lower base of 2019-20, even during the pandemic they have maintained growth. Even during the pandemic they have maintained the growth. That's what you can observe from the graph. That's what you can observe from the graph. 2019-20 to September 21. Non-NBFC's credit to GDP ratio, and if you see, looking into the credit to GDP ratio, yes, here, okay, 8.9 to 9.6, 9.6, 12.1, now we are reached to 13.7. That means in the GDP up to 13.7%, these NBFCs are giving credit. NBFCs are giving credit. Now you may get a doubt, sir, to whom they are giving the credit? To whom they are giving the credit? Now you can observe to whom they are giving the credit. The sectoral distribution of NBFC credit. NBFC doesn't require much process that involves in the banking system. But anyhow, if you see from 2020, 2021 and up to September 2021, they are giving more amount of loans to the industry. Okay, industry is the first. So they are giving more loan to the industry people. That means industry people get the loan from the market, they will get the loan from banking system, and also they will get from the banking, the industries also. So from the NBFCs also. So NBFCs are again very important as far as their entire the credit supply is concerned, because almost 40% they are providing it to the industry. And after that they are giving it to the retailers. Retailer in the sense like an individual who and me take the loans, normally by mortgaging some whatever the asset or any vehicle or any property. So that is almost 30%. That means 70% of the loans given by the NBFCs are going to both industry and retail. If you give it to the industry, then definitely industrial process kickstarts and production starts. If you give it to the retail sector, it will boost the demand, and the demand in the economy starts. So the point you need to understand is NBFCs are also such an important aspect in the economy, because they are contributing for both supply and as well as demand side factors. Both supply and as well as demand side factors have to be very clear, because when you get a question on the relevance of NBFCs and how NBFCs must be improved, then you must write the significance of NBFC. This is the significance of NBFC, both industry and retail loans. And if you are looking into the services, they are giving 14.9, and other non-food credit 15, and agriculture and allied. When it comes to the agriculture sector, they are very low. Because most of the things are taken at the commercial banks, and apart from the commercial banking system, this cooperative banking system and the regional rural banks, apart from the scheduled commercial banks, these regional rural banks and cooperative banks are also giving the loans. So here the weightage of NBFCs to this agriculture and allied sector is low, but whereas retail and as well as the industry, it is very high. Just try to have an idea on this, the credit pattern of NBFC. Okay, these are all given by RBI. Next, yeah. Now once this monetary policy, banking system, NBFC is completed, now I will come to the secondary market. the secondary market. See, this secondary market, if you are looking into the secondaries market performance, actually the performance of the secondary market is very high during this pandemic. Though our entire economy has not performed well, but the industry people are able to collect more amount of capital from this secondary market. It was highest peak reached in this pandemic time. Actually, we thought like no one will show the interest, but lot of people are shown interest to this investing it in IPOs, and lot of new companies have also went for IPO. That is the reason why recently SEBI has come up with some guidelines, like if this boom continues to such a peak, then after it start collapse, it will affect a lot of middle class people. That is the reason why SEBI has come up with the guidelines, and that guidelines also I have discussed. It was available in our Amrita YouTube channel, just watch it. But anyhow, if you looking into the preferential issues and qualified investors and right issue and public issue, and I think you are all aware what is this public issue, rights issue, QIP and preferential issue. Preferential issue in the sense you will provide some sort of preference to somebody, and qualified investors is QIP means only for few institutional investors like banks and other companies we will give. Right issue means to the existing shareholders we will give, and to the public issue means normally first time you will give. In that FPO means already the existing one will try to, the company itself want to lose its stake and wanted to give it to the other people. But anyhow, the number of issues and the subscribed capital. So just I want to come from 2016, just observe 85,000 to 2,29,000, and just observe, yep, here there was a slowdown, but the slowdown after post pandemic. But if you observe April November 2020, that means the first quarter of the pandemic, 1,72,768 crore, April November 2021, 1,81,433 crore. That means this much amount of capital they are able to get from this primary market, and you can draw individually like how much QIPs and how much preferential issues and all that you can observe. Okay. Next, resource mobilization in corporate bond market. Corporate bond market in the sense how the corporates are able to get the money from the bond market, apart from the government, how it will take it from the bond market. It's not about the government, but it is about the corporates. You can see from 2016-17 to 2021, see 6,40,000, 5,99,000, 610, 674, 771. You can see the growth here. Okay. So that means during the pandemic our banks performed well, our Reserve Bank of India is able to take an appropriate measures, and our NBFCs are performing well, our secondary market is performing well, our bond market is performing well. So this is what the fundamentals that you need to understand. Okay, this is what you need to understand, and don't think that it is possible automatically. So when the economy revived it back, sometimes yes, whatever the already inherent strength is there, that will definitely help you. But the point is, apart from that, governments will also take some measures in order to make these numbers possible. Okay. So again, if you see from April, that means after the first half of 2020 and 2021, 4,88,000, 3,62,000, here there was a reduction, but apart from that, the overall it got increased. Now, fund raising by REITs and InvITs, and in the National Asset Monetization Pipeline and National Infrastructure Pipeline, I have explained this REITs and this InvITs. These are the new innovative funding mechanisms for some of the projects, both in terms of real estate and as well as the investment projects. And even if you see, yes, even if you see 2019-20, total funds mobilized by the InvITs 11 and 2021 40,432 crore. So it is increased, listed InvITs and unlisted InvITs, but whatever it may be, it got increased 40,432 crore. Again, we need to promote it more in the budget also. Last year budget also we have given some sort of the regulatory relaxation to these REITs and InvITs, but anyway we need to promote these things. But okay, whatever it may be, but we have seen an improvement even during the pandemic year in the REITs and InvITs. That means the people in this country want to invest in innovative mechanisms wherever they will get, wherever they have some sort of faith that they will get the profit, they are ready to invest. So the point is, you need to just the scope or the spatial expansion of these innovative resource mobilization techniques like bond market or REITs or InvITs or access the bond market to the retail the retail bond market scheme announced by the Reserve Bank of India, so that even you and me can invest in government bonds, and also simplifying these IPO and secondary market processes. So these things will help us for our industry, because people are ready to invest in these type of instruments. That's what these numbers shown. Okay. Next, yeah. So benchmark indices, if you see benchmark indices, now I will pick up a date, this 2021, just I want to take this year 11/24/2021. That means November 24, 2021. Just I want to take these 2 days. That means 13th October 2021, 27th October 2021. There was a point here. This date is October 18, 2021. October 18, 2021. That shows the highest, that means the lifetime high has achieved by the both the stock markets, that is Bombay Stock Exchange and as well as the National Stock Exchange. The Sensex and Nifty both reached the highest point. The highest point that the Sensex achieved is 61,766. When it comes to this Nifty, it is 18,477. So these are the lifetime, the peaks happened during this pandemic only, that means pandemic years only. Just have an idea. Okay. So that means you can say like we are strong. Why we are strong? We are strong on every front. Why we are strong on every front? Because of these reasons. Yeah. Next. Now I looking into the another aspect. Of this financial sector in this country, that is insurance sector. See, insurance sector is very, very important, because insurance sector not only provide the insurance to the people of this country, but also it will provide the investment support to the lot of infrastructural projects, because the duration of the insurance, the investment, the duration with which the people invest in investment is very high, because simply you can't take it back immediately after 1 or 2 years until and unless some severe things happen. So definitely these insurance companies having lot of amount of money with them, it is so helpful for the growth of the economy also. That is the reason why recently Government of India has relaxed the FDI limits, and now up to 74% FDIs are allowed into insurance sector. But internationally, this insurance sector potential will be assessed based on 2 parameters. So the potential and as well as the performance of the insurance sector generally assessed on the basis of 2 parameters. One is insurance penetration, second one is insurance density. See, insurance penetration means the percentage of premium, the difference, the percentage between the premium amount the premium amount to the total GDP of the country. Premium amount, that means whatever the insured premium to the GDP. This we will call it as the insurance penetration. So, the insurance penetration means the premium amount to the GDP. Premium amount to the GDP. Next, insurance density. Insurance density. Insurance density means the ratio of premium to the population. The ratio of premium, that means premium to population. Premium to population. So, normally we will take this as a percentage, premium amount to GDP, we will consider it as a percentage, but whereas when it comes to the density, we will consider in terms of this currency in denomination, generally in terms of dollars, because that premium amount to the population. These two are the major indicators which will tell us the potential or the performance of insurance sector. Now, looking into the insurance penetration, the penetration and density in life insurance in India. If you looking into the life insurance sector, just see the insurance penetration. If you see the insurance penetration, 3.4%, that means premium amount to that of GDP. As our GDP start increase, but you can see the reduction to some extent, but again we have reached to the 3.20. But if you compare ourselves with the 2011, still we are behind. That means 3.4 at that point of time, 3.20 now. That means the insurance penetration, our GDP is increasing, our insurance premium is increasing, but as a ratio we need to do more compared to our previous performance 2011. Now we are looking into the insurance density. Insurance density increased from $49 to the 59, okay, 49 to the 59, it was in US dollars, 49 to 59. That means the ratio of premium what we have paid, premium to the total population. If the ratio is increasing, means either population should come down or the premium amount should increase. Does really in India population has come down from 2011 to 2020? No, population increased, but why it has necessitated to increase more? That means the premium amount what we are paying is very high. What we are paying is very high. That means more amount of premium we are paying, that means more amount of people, that means it is not a per person premium, no, that overall premium what we are paying, okay. So, it is increasing, Next, if you looking into the non-life insurance sector, 0.7 to 1 and 10 to 19, but less money is invested in this non-life insurance sector, less money is invested in non-life insurance sector. We need to promote non-life insurance sector also more, okay. Next, now and again when it comes to the comparison with the different states, comparison with the different countries also, it was given in the economic survey. Just go and watch it, how the performance of the penetration of the insurance and as well as the density of the insurance compared with the other countries, you can see it, okay. Anyhow, this national pension scheme and Atal Pension Yojana, it is one of the social security benefits, and they have given some statistics. Just watch it, how many central government employees, state government employees, corporate employees, individuals, so how they are subscribed to that, what is the annual increase. So, this will help us. Again, this money will also be utilized for investment purpose. They are collecting premium from you, they are going to provide some sort of social security benefit at end of some particular point of time. So, at the end of your retirement or whenever it is required, but just try to observe how we are because the social security net must be important for every citizen, and this is not only increasing the social security of the country, but it is also helping us to finance the other projects in our country. So, that is the reason why this is very important. This is very important because these amount must be invested somewhere, so that these institutes will be in a position to compensate you after 10 years or 20 years or 30 years, okay. So, this amount of money just looking into it. Next, the number of enrollments under APY, but the only thing why I have taken this is, if you looking into the burden on this public sector banks and just compare it with the private sector banks and even regional rural banks, you can understand how these public sector banks are stressed. See, governments will start lot of schemes and the entire burden is lies on public sector banks, and private sector banks are, they do involve, but their involvement is not to such an extent. That is why their more valuable time is diverted to these type of different projects. That is why that is affecting on the performance of the public sector banking system. Okay. Yeah. Now, there is another important thing that we have to understand. In the survey, they have mentioned about this corporate insolvency. This corporate insolvency is again a very important thing, because this Insolvency and Bankruptcy Code, when we have brought it in the year 2016, this Insolvency and Bankruptcy Code has created a cohesive and comprehensive insolvency ecosystem in this country. We have already tried different models in order to reduce the debt burden of the banking system and gross non-performing assets, or in order to resolve this problem of this industry and the banking system, the whatever the link that they have, and the debt or the insolvency processes. So that was a very difficult condition at that point of time. Reserve Bank of India has tried many things, and we have studied as a part of syllabus also. Now the economic survey has given some detailed analysis on this. So with the enactment of Insolvency and Bankruptcy Code, India has witnessed a birth of two professions. One is insolvency profession and second one is valuation profession. So if someone has become insolvent, how we can deal with this? And if someone want to get rid of the asset or is unable to pay the debt, then how can we really really find a better valuation to that asset? So valuation to company or valuation to machinery or anything. So these two professions has born in this country because of this IBC, and they have created lot of opportunities to the insolvency professional, chartered accountants, lawyers, and even registered valuers, professionals, everyone. So in this Insolvency and Bankruptcy Code, either we will show a resolution, it may be include merger, or it may be include amalgamation or restructuring or complete liquidation or changing of management. These are the things normally we will do under this. But because of this pandemic, in the March 2020, in the end of March 2020, we have suspended this Insolvency and Bankruptcy Code working, because under the Insolvency and Bankruptcy Code, once it becomes non-performing assets, then immediately you have to go to this this NCLT and you have to take the process. But because of the pandemic condition, now every loan has become NPA, because of there is no productivity, no sales, no consumption and all. So we have suspended that. But during that suspension, because of that, from 16-17, just try to observe the accumulations 36 to 591, 520 to 746, but suddenly there was a dip because we have suspended the process, but again it has increased to 9 because we have revived that process. Next, now I will give an important information as far as this Insolvency and Bankruptcy Code is concerned. See, the status of corporate insolvency resolution process. Admitted are 4,708, closed on appeal or review or settled is 701, closed by resolution, that means by one or way other process we have resolved 421, closed by liquidation means complete selling 1419, that means most of the things were liquid. And if you looking into that entire process ongoing, there are 1640 are there still. Out of 4710, 1640 are still going on, but 1201 has taken more than 270 days. We are able to resolve only 133 things within 90 days. That means the rationalization of the time is very, very important. Rationalization of the time is very, very important. Why rationalization of the time is very, very important means, as the time progress, the valuation of the assets come down. The valuation of the assets come down. So the every distressed asset have a life cycle and their value gradually declines with the time. Maybe because of this reason, many debtors are resolving the distress in the early stage of distress. They are going for this resolution in the early stage of distress. Either when the default is imminent, that means when the default is compulsory, when they think that okay, we are going to default, at that point of time itself they are going for a resolution. That means they are going to resolve it at one or other point, they are going to resolve it. So their idea is that not to wait till NCLT given judgment or something. The moment when they think that the insolvency is imminent, then they are going. Some people are going on the either when the default is imminent one, second one is on the receipt of notice for repayment but before filing the application. That means the creditor has served a notice to you, but they haven't filed an application with this NCLT. At that point of time they are trying to resolve. But some people even after the filing of application, but admission has to be taken place, before the admission by the NCLT they are taking it back. That means once it is entered into the NCLT, if the process takes a lot of time, by that time the valuation come down. So why should we wait till that point of time? Anyway the valuation is coming down, why can't we resolve it early? So that is the main theme that has brought some sort of behavioral change in the corporate sector and as well as the banking system also. I will give a number till September 2021, 18,629 and the worth is around 5,89,000 crore worth of assets are there. But this is the worth of those things, and 18,629 were resolved before their admission. That means they don't want to go to the LCLT, because if you go to the LCLT, the resolution is imminent, because either one or other way you have to resolve. But if it takes some time, then the value has come down. That is the reason why they wanted to resolve immediately. You may get a question under IBC. IBC is not only resolving the debt of the corporate, the debt of the companies, but it is also bringing some sort of behavioral change in the economy. So if you get such question, you need to write about this aspect. How behaviorally we think, like instead of going there, why can't we solve our own problem immediately? Because anyway it will be solved here, because NCLT process is such that it will get resolved in one or other way. But if the valuation come down, then it will be a big problem. Okay, and even some of the applications, even once you file to the even if you file with the NCLT under the section 12A of IBC Act, you can withdraw that application, provided if 90% of the creditors are accept to that, and there is some process. Likewise, even 527 the applications were withdrawn from the IBC. So in IBC some are resolved. Because of the behavioral change, lot of things were solved before entering into the admission stage of the NCLT. Some are even withdrawn even when they are admitted by NCLT. So that means it is bringing both behavioral change and as well as the resolution process. Now I will show one more important thing. See, this is the performance of IBC. Actually, performance of IBC was not given in the last year economic survey. It is very, very important. You can use it for writing this IBC, because IBC is one of the very important reform that was brought by this government. See, number of companies, aggregate claims. The companies, rescued companies ordered for liquidation, total. So I will come to this total. Aggregate claims. That means the total amount of money what we are claiming is this much. The companies who are rescued, that means the companies has not went for liquidation, still they are surviving and they are running by either them or some other people. It has decided in the NCLT by the insolvency personnel. But see, this is the overall liquidation amount what the creditors has demanding. That means this is the creditors legitimate right. The point is liquidation value. Suppose if you go for complete liquidation, if you go for complete liquidation, how much you will get? This much you will get. If you go for liquidation in the sense, if you simply sell the assets and everything, how much you will get? This much amount you will get. Now, resolution value, asset available as a percentage of aggregate claims. That means I am a company, I have taken a loan and now with interest and everything it has become this, but at present I am having this much amount of assets only with me. That means even if you sell the complete assets, the creditor can only get 18 rupees. That means out of every 100 rupee, he can collect only 18. It's a complete loss. But if you looking into the order for liquidation, they got only 7 rupees. It is rescued companies 18, but liquidation companies only 7 rupees. It is a loss, but still you are getting that 7 rupees. Otherwise, you don't get that 7. Now the point is resolution value. Okay, now what we have done is, here we went for complete liquidation, but here we haven't went for liquidation, we have resolved it. To what amount we have resolved? Okay, this amount. That means this much you need to get, aggregate claim, this much you got. That means how much? The resolution value as a percentage of aggregate was 32. That means by resolving you got 32 rupees out of 100. So creditor has able to recover 32 rupees out of 100. Though it looks like low, but it is comparably high when you compare it with the previous practices or the previous methodologies. Anyway, the resolution thing does not work out here. Now see resolution value as a percentage of liquidation value. Now you see resolution value is this much, liquidation value is this much. Had you not resolved it through the resolution process, you could have went through a liquidation process. If you went through the liquidation process, this much amount of loss, the difference, this much amount of loss, this is 172.42% on the liquidation value, you could have loss instead of resolving. Because if you don't have proper resolving mechanism, what is the ultimate the technique that is available to everyone or the creditors? To sell it in the open market. See, the purpose of IBC is not to sell it in the open market, that means not to sell every component, but make utilization of that company or that institution so that that business will be in the running process and at the same time we can recover more. So this is the achievement of this IBC. Though the realized value is very less, but compared to that of liquidation value, it is this much amount of high. That is what you need to understand. Be careful, the aggregate claims, liquidation value, resolution value, and resolution value as a percentage of aggregate claim, resolution value as a percentage of liquidation value. Okay, just have an idea on this performance of the insolvency and bankruptcy code. Okay, so these are some of the parameters through which you can understand how we are maintaining our financial sector and as well as our monetary sector. And one more thing, the average time taken, here it has taken huge time, 495 days. Even to liquidate also we are taking 375. We need to reduce the time. The cost also on the resolution value 0.5%, that is the cost involved in this. Okay, just have an idea on these different aspects, from IBC to NBFC to the secondary market to the insurance sector to the banking system to the monetary policy of Reserve Bank of India. Okay, thank you.
Amrita IAS Academy.